So good afternoon, ladies and gentlemen. How are you? I'm blessed. Can someone tell us where we stopped? Where are we? Sorry? We're supposed to start on what? Double entry. What about double entry? What about double entry?
Double entry, it states that every transaction in the book of accounting should be recorded twice. And the other book is debit and the other book is credit.
So we are looking at double entry principle, or in other words, double entry accounting, or double entry accounting. Now, last time we met here, we were discussing an accounting equation, isn't it? What did we say about accounting equation? What did we say on accounting equation? Huh? Asset is equal what? Capital plus liability. Or in other words, capital is equal to what? Asset minus what? Liabilities. Or in other words, how do you find liability of the company will be equal to what? So asset minus capital will give us liability. It's an equation that has to balance by the end of the day, or by the end of the day. Yes, come in. Now, our main focus was we discussed what assets are, and we discussed capital, and we looked at liabilities and how do they come into existence. We know what assets are, we know examples of what assets, isn't it?
Yeah.
We know what liabilities are, we know the categories of liabilities, as well as examples of what? Liabilities. Now, we have to move on, we have to grow up a bit, isn't it? So we have to look at the double entry principle. I heard someone saying here, what did you say, my dear?
Double entry states that every transaction must be recorded twice in the book of accounting. The other one is debited, while the other one is credited.
Okay, that one is good, the other one is debited. Thank you. Any other contributions or suggestions? I know last time I said next class we'll be looking at double entry principle, isn't it? Now my expectation is, as a student who is very resourceful, who is very responsible, should be able to do a research on double entry, because that's what I get using. Yeah, what did you find out?
Okay, double entry accounting or principle state that credits is equal to debit.
Credit and debit. Okay, thank you for your contributions. Now, double entry is an accounting concept, or in other words, you can say an accounting what? Principle that states that or which states that every financial transaction has a due what? Effect. Every transaction has a what? Due effect, isn't it? Due, as in two. Eh? So it has a draw effect, isn't it? As in two, isn't it? Now, we're saying every transaction in the accounting, or when you are recording or doing a bookkeeping, every work you are doing as a bookkeeper has how many effects? So what we are saying is a transaction has two effects. That is to say, every debit entry in the books of accounts, every debit entry in the books of what? Accounts has a corresponding what? Has a corresponding credit entry. Altogether. So every transaction, every entry, every debit entry in the books of accounts will have a what? A corresponding credit entry. So which means there are two entries that we make in financial transactions. We can either make a debit entry or we make a what? A credit entry, isn't it? So these entries are done simultaneously. What? So when we say every transaction, a financial transaction has a due effect, that means debit and credit are done simultaneously. What are these financial transactions? In this case, financial transactions refers to what? Assets, capital, and what? Liabilities. Any transaction relating to assets, any transaction relating to what? Capital, any transaction relating to liability is a financial what? Is a financial what? You guys. Is a financial what? Don't slide this. This is not a bedroom. This is a class. It's a financial transaction, isn't it? So if any transaction relating to asset, capital, liabilities are financial in nature, it means they have to affect how many. They have to actually correspond to one another, isn't it? So it's either you debit, then either what? Credit on the other side, isn't it? So this concept of entering a transaction, the same transaction affecting two areas, two corners, is what we call the double entry, isn't it? So double entry is done. So I'm saying double entry principle is done on what we call is done to help fulfill the accounting what? Equation. Accounting of assets, accounting of capital, and accounting of what? Liability. So double entry fulfills. So double entry fulfills the accounting. Accounting of what? Assets, capital, and liabilities. Shimoza? Asset, capital, and liabilities. Sorry, my handwriting is very, very nice. If you can't see, it means you have a problem. So if you can't see, then ask. Isn't it? You ask Or you write as I speak, because most of the time I speak what I write here. So, are we following here? So, how do you present this double entry? How do you make a presentation of a double entry? So, what we're saying here is for us, presentation of double entry, or in other words, presentation of double entry, or in other words, exercising the use of double entry. So, for us to exercise the double entry principle, we use what we call what do you use? So we use what we call yes? Huh? Inventory. What is inventory?
It's just all goods like a list of items and organization. We say one step.
Okay, thank you. So, so the double entry is completed by using, so we're saying the double entry is completed by using a T account. Do you know that? So we use a T account to present the double entry, isn't it? Do you know that? For you to make a presentation of double entry, we use what we call a T account. I want you to understand better so that we should be able to move together. If you have questions, ask. If I'm too fast, let me know. If I'm too slowly, tell me. My friend, are you writing? Where? Okay. Why have you changed the seat? Thought you're sitting in the seat. You used to sit there.
Yeah, I found someone sitting. No.
Someone next week go sit there. Okay, so what I'm saying is a T account is a T. You know what a T, a letter T, isn't it? So this is the letter T. So we use this letter T to present the double entry. Now this letter T has two sides. There's this side and this side, isn't it? Which side is left here and which side is right here? Which one? This one is right? Left and right, isn't it?
Yeah.
So, okay, we have two sides. This is the T account. That's what we use to present the double entry. So this side here is the debit side. This side is what? The credit side. The debit side in accounting represents the receiving. Receiving what? Sides. All together. And the credit side here represents the releasing what? Side, isn't it? All together. So whatever you document or you record here, you are recording something that is what? That is coming in. That is being debited, isn't it? To debit is more like entering or receiving. That's debiting. You're bringing in something, isn't it? You're bringing in inventory. You're bringing in money. Together. You are selling something, money is coming in. That's receiving, isn't it? That's debiting, isn't it? You are paying something, you give out what? Money. You are crediting, isn't it? Okay?
Yes.
So the crediting side, that's taking assets or taking assets out. The releasing side, bringing asset what? Okay? So, this is the what? The debit side. This is the what? Understood. So the debit side, we call it DR. We put as DR, isn't it? The credit side, we just put as what? CR. So, the T accounts will look like this. How to get that? We're going to have the DR. Instead of putting a debit, you just put on DR. Can you see? Here, instead of writing credit, you just put on CR. Someone would say, okay, CR means what? That's the credit what? The credit what? Side. The DR, that's the debit what? Side. Are you able to differentiate these letters? We're talking about debit, credit. Now we're talking about DR and the CR. Can you see? Now, so if this one is an account, you can create a ledger, you can create an account, you can create it. Yeah, it's an account, someone's account. So what will happen is this account is going to have a name. Here, you are going to put a what? A name of an account, isn't it? Altogether. Here, you are going to put a date when the transaction what? Was made, isn't it? Here you put details. What happened? Was it a, were you selling? Were you paying someone, isn't it? Were you receiving from someone? Here you put that amount that was reflected, isn't it? So it will have these details. When did the transaction take place? Now we're starting what? This is what we call bookkeeping, isn't it? We're recording things, isn't it? So when you're recording things, you have to be very, 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 very detailed, isn't it? Because we want to have an audit what? Trail. We should be able to follow. Where is the transaction coming from? What is the source of the transaction? Isn't it? Because whatever you're doing here will go up to financial statement, isn't it? The balance sheet you're talking about, income statement that will be running in the future, they will come from these simple details, isn't it? So you have to be very detailed here. Okay, don't just look at me, but understand this as well, isn't it? Well, any question, ladies and gentlemen? So, if this one will have these details, it means here we're going to have the same what? Thank you so much, madam. Details and the amount. Okay. Before we go further, okay, I want us to look at a simple scenario. I remember this class? Can you go and knock? You go and knock and wait where are we going? Yeah, so what I'm saying here is if this is an account, isn't it? Yes, come in. Next time you come, please knock. Are we together? Yeah. Otherwise, I'll chase you. I'll send you out faster than you came. Find yourself a seat. Now, so what I'm saying here is why are you laughing at this? How now do we? I want us to look at a very simple example of the step. A simple example. Assuming, yeah? You are a student, isn't it? And I know some of you come from your home, you're coming from your parents. Okay, some of you are at the hostel, isn't it? So whatever scenario you are, or situation you are in, put your phone aside, get your copy, be lighting. But my question is, assuming your father or your parents or your guardian gives you 20,000 every week. It's assuming, isn't it? So you have an account, isn't it? Okay? And your father is giving 20,000 every what? Every week. What it means is, if the 20,000 is coming, I'm just picking a simple example, isn't it? What entry are you going to make in your account? The 20,000 is coming from your daddy. You put 20,000 where? So you have 20,000 that has come, that you have actually has just come in, isn't it? Now, what is the purpose? You ask, what's the purpose of this money? So for your dad to give you 20,000, it means you had presented to him, or you have presented to your guardian a budget, isn't it? Altogether? To say, I need 20,000 for this week. Maybe I need transport, I need food, A, B, C, D. You gave them a list, and they're trying to honor that list. So they've given you that 20,000. So you have debited your account, isn't it? You have 20,000. What do you do with the money? So you say, okay, on Monday, you put the date here on Monday, transport. How much? 1,000 baht. Tuesday, you put the date here, Tuesday, lunch, 3,000 baht. Transport. Are we together? Why are you putting it this side? Because now the money has come in. Now you are releasing the money to buy what was budgeted for. So you are crediting your account, So you put it here, 5,000. So the question is, you might not spend more than what you've been given, because you're part of the supplies. I only gave it 20,000. And why are you spending 25,000? Is it possible? What's your name, friend? Huh? Patience. Is that your name or your first name? Is that your name or your first name? Yeah, so my question was, what is your name?
My name is Patience.
No, what's your first name? As you have said.
My name is Patience.
Is it Patience Namadi?
Yes.
Patience who?
Yes, Namadi.
What's your surname? Patience who? Patience who?
Mara.
Okay. So that's your name. Now, so you cannot spend more than what you have been what? Given. You spend within your what? Your budgeted. So how is 4,000? You have about 9,000. So you can say, okay, on Friday I spent maybe 10,000. Altogether. So what you're doing here is that you have received the money. Here you are what? Spending the money. When receiving the money, you give the details. Where did the money come from? This and that. Date, when the money reflected in your account, the details, and details just, where is the money coming from? Who is giving you the money? Altogether. Here you are simply recording where the money is going. Altogether. This is not a double entry. I'm just giving a simple example of a transaction that can take place, isn't it? But now, how does a double entry work? How does it work? Okay. Now let us look at this. So I'm saying, under double entry, we're simply exercising the accounting. We're simply working within the accounting equation, isn't it? Now we know for sure that accounting equation has three things, isn't it? So we're going to put the accounts here, and we're going to put what to record, and we're going to put here entry in the book. What entry do we make in the book of accounts? All together? Okay. So, let us look at this here before we go into details, or before we discuss the details. Now, We'll start with the first account, which is assets, isn't it? There are two things that can happen with each item in the accounting equation. Assets, there are two things that can happen, isn't it? The first thing is the asset figure can increase, isn't it? Are we together?
Yes.
If today you have 2 bicycles and you decide to buy 3 more bicycles next month, what does that mean? The assets in the name of bicycles have increased from 2 to what? 5. So the assets can what? Increase, isn't it? At the same time, the asset can also what? Decrease it. If you have 5 bicycles today and you decide to sell 2, what it means is the bicycle figure or the number of assets in the form of bicycles will have to move from 5 to 3, isn't it? If you have sold 2, isn't it? So there are two things that can happen. You can increase the what? The assets, or you can decrease the what? The assets. So the question is, what happens whether you're increasing or decreasing the asset? What happens? What do you need to record? The question is, if assets are increasing, what happens to the asset account? It's also increasing, isn't it? So what entry do you make to the asset account? Also don't discuss, isn't it? So when assets are an increase, I would like an increase, yes? That means an increase not assets, isn't it? You're buying more assets. What do? You're supposed to debit. What do you debit? The asset what? Account. Timoza? See, we said the T account, each account has a name, isn't it? It could be a model hand account, it could be asset account. Okay, it could be an asset account, it could be capital account, it could be what? Liability what? Account. But each account, each asset, each account should have a name, isn't it? Now, so here we're saying, if assets are increasing, you debit the asset account because you are buying more assets, you are bringing more assets to the what? To the company, isn't it? What happens when we have a decrease in asset? You credit what? Do you credit? And the asset what? Account. Are we together?
Yes.
Let's go to liabilities. Do we do the same to liabilities? What happens when liabilities are increasing? Huh? What do you debit? Liabilities account, eh? Why do you debit? Okay, we all know what liabilities are, isn't it?
Yes.
If today you decide to get money from patients, for example, you borrow, or she lends you money, 100,000. If patients lends you money, 100,000, what means is you as a person, you are increasing what? Liability. Patients is a liability to you, isn't it? Because you need to pay her back. Are we together? So the moment you get 100,000, which is payable to patients at some time, so that you are increasing number of, if you get more ngongole, it means you are increasing more what? Liability, isn't it?
Yes.
Do you know that?
Yeah.
So when liabilities okay. So what happens when liabilities are increasing in your books?
Credit. Credit.
My friend, you said debit, eh? Now you are saying credit. Why are you confusing the class now?
Because you have explained.
Because I've explained that.
Yes.
Okay. Well, you said debit. Now I explained this. You said no, credit. Okay. So, an increase in liabilities, you have to credit. Liabilities what? Account. I know someone will say why, isn't it? Ellen?
I can answer.
You can answer? Yes, answer, sir.
Okay. For instance, if you have borrowed airtime to from Airtel Money, they say that your account has been accredited, which means some money has increased in your account, meaning you have the money, but the void is borrowed, but it is with you. Your account has increased.
Okay. I know you understand. Yeah, thank you so much. I know you understand better when we be looking at examples so that you should be able to understand it. On liabilities, for example, if you, for the same example, we get money from her, isn't it? 100,000. What it means is we are increasing our assets in terms of money. Altogether?
Yes.
At the same time, we are increasing what? Liabilities, isn't it?
Yes.
So, in this case, because the money hasn't been paid, she will release the money, we will debit our account. Altogether? Her account will not be debited because we haven't paid her. You see? She's only giving us money. So the moment we make payment to her, we are decreasing what? Our money, because we are releasing money and we are debiting her account to pay. I know you don't understand, please.
No.
For now, understand it in that way. But we will be looking at examples, so I think by looking at examples, you should be able to understand what I'm talking about, isn't it? So, a decrease in liabilities, you need to debit. Decrease, I mean, they will right? That's what it means, isn't it? So if the number of liabilities is going down, means you're paying them. So if you're paying them, you're losing money, and they're receiving money. So liabilities are debited. You are losing money, you credit your accounts. That's what happens. Altogether? Okay. The last one is capital. What happens to capital? Peter, what is capital? You didn't attend the first class, huh? The first two classes.
Yes.
Did you copy the notes?
Yeah.
Friends?
Whatever.
You are. Okay. You didn't attend the last class, huh? Did you? But this one, huh? You did it? Okay, please copy the notes that your friends. It's very important because we need to be moving together, isn't it? Otherwise, you're going to have a peak. Understood? Now, capital. What is capital? Life more I don't know how true is that. But it could be true. It could be true. No. Who is the class rep? Anyway. Yes. You want to answer on capital?
Yes.
Yes.
Capital is money or assets used to start up a business.
So for you to start business, you need money or assets. Huh? Is money an asset? No, I'm asking you. Is money an asset?
No.
It's not an asset, huh? What is it?
Income.
Money is income.
It's what you get after every assets are like maybe let's say products. If you say,
Did you attend the very first class that we had?
Yeah.
The second class? What did you say on the example of assets? Or categories of assets?
You say there are things that you use to make money.
So the very same class that we discussed, maybe, what did we say, what are the categories of?
Things that they last longer than a year.
No, you go and revisit your notes. We did those things, don't be lazy. I said those things and we did those things. We described what categories of assets we have, and for each category we discussed examples, isn't it? Didn't we do that? Go read those things. Don't waste our time here. We need to move on. What did we say? You need to be studying, isn't it? I said at the very beginning, you say you need to read, to study. If we give you notes, the reason why we give you notes is to study, isn't it? In fact, you're supposed to do much work. Out of 100%, we're only supposed to cover 25 to 30%. You're supposed to do 70% of work. So you need to study. Whatever I give you here, when you get wherever you stay, try to look at whatever we've been discussing, isn't it? It's very important. It helps. This is accounting. It's not just any other thing. It's accounting. You need to understand the things. You need to know the things if you want to master the things, isn't it? So you need to study these things. Research. Make use of Google. Check. Read about accounting equation. Read about assets. It's very important, so that you should have at least you have enough knowledge, isn't it? Are we together? So here we're doing double entry. Next meeting, I expect you to explain what we are discussing here. So the first 30 minutes, everyone will be given whether 10 minutes, 5 minutes to explain what we are learning today. Are together? That's what we'll be doing. Now, capital, we know we are looking at resources required to start a business. Resources could be money, could be buildings, and what have you. But what do you need to start a business? Sometimes you don't need money. Sometimes you need your money. You need other people's money to start your business. So it depends. What do you need? What do you use to start an investment or a business is capital. So my question is, what happens when capital is increasing? Capital increasing, an increase in capital, we credit capital account. Are we together? A decrease in capital, what do?
Debit.
We debit capital account. What was it? Why do we debit? Why do we credit capital account when we're starting business? We'll discuss that later. So let's look at examples. Let's look at what? Examples. Practical examples. I want you to master these things. Please, the double entry principle is the basis for what? Accounting or bookkeeping. Once you miss the double entry, but you have missed it, you can't, it will be hard for you to understand any concept in accounting. Well, that's where work is, isn't it? Whatever we're doing here, that's what is happening in offices now. Someone is trying to double entry something now. He's trying to post something there, credit this account, debit this account. This account, this account, this account, this account. I'll get it. Very good. Now, let us look at these the following examples. First example, I'll just dictate. After dictation, then we can discuss. The owner The owner of the business, okay, not the owner of the business, but the owner starts a business. The owner starts a business with the 1 million kwacha in cash. The owner starts business with 1 million kwacha in cash. On 1st August 2022. So I think the owner starts the business with 1 million in cash on what? 1st August 2022. Now, what is happening here? Someone has decided to start a what? As a business. And how much money is starting a business using what? Money. How much money does this person have?
1 million.
So if you look at that statement, 1 million is what? Huh? So the question is, prepare that double entry what? Or prepare double entry transactions or double entries for this transaction. So we are required to prepare double entries for what? For this particular transaction. So, practically, yes, madam. So, yeah. So okay, there are two things that I think we see. Someone is starting a business, isn't it? And in cash. Yes, he has money in cash, isn't it? Someone can start business with money in the bank account, isn't it? So there are two scenarios. You can have a bank where money is put in the bank, or you can have a cash. You can have cash in hand or put somewhere in the business for operation, isn't it? So let us use a T account. So when you have, we're saying every transaction has two what? Effects, isn't it? Which means every transaction is supposed to have two T accounts. You know that? Every transaction is supposed to have how many T accounts? Two. That one for debit entry and that T account for credit entry. Isn't it?
Yes.
So in this case, we're going to have two T accounts. I'll put the other T account here and I'll put the other T account here. We know here is DR what? Side, and we know this is what?
Yeah.
We know this is what? DR, and this is what?
Yeah.
Not CR7, yes, but just CR. Now, let's go to the question. For every debit entry, there should be what? A corresponding one. So the owner starts business with 1 million in cash. What does that mean? What are the two accounts that are affected here? And the owner account, if you are starting a business, which means you need to have what? 1 million is what? Capital. Are we together? Are we all agreeing that 1 million is capital? That's the money that the owner has to start a what? A business. 1 million. Now the next question is, does this transaction increase or decrease capital? Does it increase or decrease? It is decreasing capital? Increasing capital? Decreasing? Are you sure increasing? Think. Don't just answer. Think first. I know you're not thinking, but think. Look at the transaction and think. Okay. Before you start, okay. Are you thinking? Are you done thinking? Not thinking. Think. Yes, sir. Are you thinking? So, before this person started business, he had no capital, isn't it? Or the capital account was what? 0, isn't it? Now he started business, he has what? 1 million, isn't it? So there's an increase in what? Capital is what? Increasing. What happens when capital is increasing? We've just learned just now. What happens when capital is increasing? What do you credit? What do you credit? No. You credit your capital account. So this tells us that we need to have one capital account, isn't it? Because the capital account has to be credited. Okay. The coming in of money into the business has increased what? Asset, isn't it? Asset of what? Cash, isn't it? Cash has increased because that money is in the form of cash. So cash is increasing. Assets in the form of money is increasing, isn't it? With the introduction, the injection of 1 million. So when assets are increasing, what do you do? Hey. When assets are increasing, what do you do? We just learned just now. You credit? You debit? What do you debit? In this case, yeah, we have debit. We have to debit asset account. When assets are increasing, asset account is debited. But in this case, what asset account is being debited here? You have to be very particular. Capital is not an asset account, it's a capital account. Read the transaction again. What name of asset account is that? Very good, cash. The owner is starting business with 1 million what? Cash. Cash account is debited. If it was 1 million bank in the bank, then the bank account would have been what? So the other account, corresponding account would be what? No asset. It's asset account, but you have to be very specific. What asset is that? Is it cash? Is it motor vehicle? Is it prepayment? Is it receipt? Receivables. What asset are those? So in this case, the asset is cash. So we said this one has to have. Okay. So are we all agreeing here to say when capital is increasing, we have to debit what? We have to credit capital account. So what I'm saying here is that this capital account, we're going to have debt here and amount or details. And what? Amount. We know the amount in quadrant. Amount we know is 1 million. Altogether. And debt we know is what? What's the? 1st August, 1st August 2022. Details we know is what? No, it's not capital. The capital account is releasing cash. Understood? So here we're going to have on details. We're going to put what? Cash. And this transaction is incomplete. Understood? Someone would ask, where is this money going? It has to have a corresponding what? This is a credit entry, isn't it? It means somewhere we need to have a debit what? Entry, isn't it? You know that? The money is going out. Where is it going? the money is moving out of the account. My friend, are you lighting or you are busy with your phone? Are you sure? What are you lighting now? Oh, very good. Unless you know what kind of basic and all so only when I'm busy will be. Okay. So, drama that was repeated. That's the question. So for every, so here we're going to say this is a credit account, isn't it? And we're going to have a debit account. So we're going to have a debt, details, and amount. So amount will be in kwacha. So here, this account has received what? 1 million. The question is 1 million Diajan. The details will be what? Huh? Huh? This money that is in the cash account is for capital. Debt will be the same, isn't it? 1st August 2022. Okay. I want to understand the good thing. Are we able to see here? Are you able to see? What is happening here? Can someone tell me what is happening here? We know your business has released money in the form of capital. So the capital account has been what? Credited. And the cash account has been what? Debited. So for every debit entry, there should be corresponding what? Credit entry. And this account is releasing money. This account is what? Receiving money. Now from here now, business will start what? Spending money. When they are spending as well, there will be a double what? Entry. For example, if they are buying what? Or furniture or building materials from cash bill. That means if it's 100,000, it will be 100,000 going to what? Cash bill. They're going to have a corresponding cash bill to what? Account. It will be credited here. The cash bill account will be what? Debited. Am I making myself clear?
No.
I'm not making myself clear, is it?
Yeah.
I'm confusing you.
Yeah.
Am I confusing you or you came confused? Hey. Can you get away to something? I'm confusing you. Where are you confused? So you didn't come here confused, and now you're confused, isn't it? Where is your confusion? I want to understand the confusion. Please, if you don't understand, please ask questions, isn't it? We're not here. We're all learning, isn't it? So I want you to ask as many questions as you can, so that you get to understand, you get to know more about accounting. Yes, my dear.
That's where the money is going.
Mhm.
Is in there. So you have going.
Yes.
So if you're spending, you have to draw again.
When you're spending, which money? This one.
You say you'll be spending like the furniture, buying $20. So you have to draw again like
A double entry. Every transaction that you're doing, there should be double entry. If you're buying furniture from this money, then there should be double entry. Cash account will release money, and someone has to receive the money supply. If you are the one supplying us with building materials, what's your name?
Mona.
Huh?
Mona.
Mona. So if Mona is supplying us with building materials, what will happen is that if we're paying you by cash, for example, we're paying you 300,000. What it means is we're going to release 300,000 here. What is the corresponding account? We're going to have Mona what? Mona account, isn't it? Mona is going to receive how much? Can you see? Because we cannot say, well, we have bought building materials, but you don't have a corresponding one account, then that's not double entry. If you're buying, make sure you have two accounts. Yes, yes, yes.
So that means we're supposed to create another account. Like,
Okay, this is just an example. Okay, okay. Anyway, another account for.
from the cash account.
Mhm.
The cash account.
Mhm.
So now we're buying things, for example. So maybe there's no one, so we're supposed to write it for debit, like, or we're supposed to create another account.
Okay, if now okay, at first the owner is starting a business, and that owner has pumped in 1 million into the business. So the money we have credited the capital account, and we have debited what? Cash account, isn't it? Now the money is in the business. Now we start what? Spending, isn't it? You're buying whatever you're buying. It means the money will be whatever transaction you're taking place. Whatever you're buying will reduce this 1 million that is in the business. So, if you are buying assets, it will reduce what? 1 million. So in this case, the cash account will be the same, but you're going to have corresponding what? Account, isn't it? Depending on what you are buying. If you are buying tomatoes, where do you buy tomatoes? You put your account there. What are you buying? Everything that you're doing, you put a corresponding account. Understood? Okay, this was just one example. Let's go look at other examples, isn't it? I think take on an example for or a wheel attached, you should be able to understand. Okay. These examples are independent, isn't it? Are we together? So I'm clearing off this. And let's look at example 2. Okay. A business buys a motor van. Are we together? Or a business bought a bought a motor van for 4.5 million kwacha. A business buys what? Or a business bought a motor van for what? 4,500,000 kwacha, isn't it? Cash. On 2 August 2022, a business bought a motor van for 4.5 million kwacha on 2 August 20. Okay. This one was bought on cash, isn't it? A business bought motor van for 4,500,000. A motor van, a van for 4.5 million cash on 2 August 2022. What's happening there? Can someone explain to us what is happening there? Yes, sir.
Withdraw a fee transaction.
I don't know.
Withdraw a fee entry,
Uh-huh.
and then we'll write it. We wrote there cash account, which is 4 million, 4.5 million,
Mm-hmm.
which has been reduced
Mm-hmm.
when buying an asset, which is a motor van. Which is a motor van. At the end, we have increased an asset, also a motor van. So we'll have to go through accounts, an asset account, and a cash account.
Okay, so thank you so much. We are buying a motor van. Is the motor van an asset?
Yes.
My friend, where are you from? Well, you're saying yes, you're like this. Okay, here, yes, it's like this here. So I don't know. Okay, so I'm saying a motor van is an asset. Under what category? Is it a non-current asset or a current asset? So we are buying a motor van by paying what? Cash, isn't it? Is cash an asset? So what I'm saying is we are buying a motor van by paying cash. By buying a motor van, we're increasing asset, isn't it? What asset are these? We're increasing non-current asset in the name of what? Motor van, isn't it? And the motor vehicles are increasing in the business by bringing one more, or by bringing that motor van, isn't it? At the same time, because we're paying money, we are also decreasing what? Assets in the form of what? Cash asset is decreasing. Motor van assets are increasing. So, what do we do here? It's straightforward, eh? Assets are increasing, what do you do? Please, the one that diagram I gave you said assets, capital, liabilities. Increase, that one you have to master that one, isn't it? Master that one. Don't memorize it, but master it. And if you don't memorize it, just master, okay? Assets are increasing, we need to debit asset account, isn't it? Assets are decreasing, we need to credit asset account. So in this case, what's happening is we are going to have two accounts. We have motor van account, we have GR here, and CR where? Here we're going to have what? Cash what? Account. Please write in full, cash account. We have DR and CR, isn't it? So what do we do? We have to credit the cash account, isn't it?
Yes.
So here we're going to have the date. Don't forget to put the date. Don't forget to put the details. And don't forget to put what? The amount required charge. So in this case, on 2nd what? August 2022, what happened? We bought what? So the details about what? Motor van. So we are going to have motor van here. At what price? 4.5 million. How together? Are we together?
Yes.
Now the question is this complete? Someone will ask you, where did this money go? Because this side, anybody is releasing it, it's taking money out, isn't it? It's taking money out of the business. If we record it here, it means it's bringing money in the business. Still more, someone will ask, you said you paid for motor van. Where is the corresponding what? Account. So here is the corresponding what? You're going to have the dates, details, and so in this case you say, this account did not receive a motor vehicle, a motor van, but it received what? Money. Hey, don't think too much. I can prophesy that you're thinking too much. Okay, don't think too much, eh? Just don't think too much. Otherwise, have you ever noticed that? You're writing exams and you're thinking too much. So you go ahead of the answer and you leave the answers behind. And now you find you move out of the exam room, leaving the paper blank because you had to overtake the answers. Don't think too much. What we're saying here is that we're saying on 2, the dates will not be different. Because, guys, these things are done simultaneously. The moment you are releasing the money here, the same second, this account is what? So I'm saying on 2nd August 2022, what did we receive?
Cash.
Very good. You are the best. No, you are all the best, isn't it? So 4.5 million was received. From where? Can you, what are you noticing here? This, if you have noticed, if you really think, which I'm sure you guys are thinking, if you notice this one is this one, isn't it? And this one is what? Have you noticed it?
Yes.
So it means what you put here is the account where the money is what? Going. What you put here is the account where the money is what? Coming from. Understood?
Yes.
Are you sure? Any other questions? Huh? Thank you. Let's look at this example now. Let's look at, you've been to secondary school, some of you, isn't it? You've learned geography, most of you, isn't it? The teachers used to tell us, say, the higher you go, the cooler it what? Yeah. So let's move a bit higher, isn't it? Example 3. The business bought. When you write the T account here, have you written the T account there? Are you sure? Okay, if you have written, then let's move on. My friend, how do you like your T account there? Are you able to put there the T account? You like them in detail, huh? Good one. Don't let those women disturb you. No, I'm talking to my blood. I say, don't let anyone disturb you. Be focused. So, guys, let's look at example 3. A business bought fixtures. Okay, bought what? Fixtures are more of shelves, isn't it? Or the shelves, isn't it? So the business bought fixtures on credit. Bought what? Fixtures on what? Credit. From where? From shop fitters. Shop what? Shop fitters. From shop fitters. From shop fitters, huh? For 1.2 million kwacha. 1,200,000. For 1.2 million kwacha on 3 August 2022. This is a bit tricky. Can someone please explain what's written here?
I think it was the business that increased
Liability of business has increased. How?
by buying something on credit.
Mm-hmm. Any other contributions?
Asset has increased.
Assets have increased.
Yes.
Which assets are increasing here?
Repeat yet. Fixed it.
Fixtures, okay? What else, guys? What?
We debit.
Mm-hmm. So, what is happening here is the business is buying fixtures on credit, isn't it? From shop fitters, amounting to 1.5 million. What is happening here is the shop fitters have delivered what? The fixtures to the business. Understood? And the money hasn't been what? Paid to shop fitters by what? The business, isn't it? There is no cash transaction here. Money hasn't been paid. Though goods have been what? Bought. How do you transact? How do you record such a transaction? Something is done on credit. How do you record it? Yes, my dear.
Will credit. It will increase and then
What is increasing here? By buying fixtures, it means we're increasing what? Assets, isn't it? What happens when assets are increasing? What account are we debiting here?
We fixed it.
Fixed account, isn't it? Now in this case, we are buying on credit. What does that mean? Credits are what? There's an increase in what? Liability, isn't it? If you are buying on credit, it means you are increasing what? Liabilities. So what happens when liabilities are increasing? What do you credit? And what is the liability account in this transaction? Shop fitters, isn't it? So are we agreeing that we are going to debit fixtures account with 1.5 million and debit and credit shop fitters with 1.5 million? Are we agreeing to that? Are we? Are we agreeing that shop fitters will be debited with 1.5 million and the corresponding account or the corresponding entry will be? So we're going to have two. We're not going to have cash account, cash or bank account here, because there's no money, there's no movement of money, isn't it? No movement of cash. It's just a product coming and increasing the liabilities. So, okay. So we're going to have what? So we're going to have fixtures account together. At the very same time, we're going to have what? we're going to have what we call shop fitters what? Account. And make sure you put DR here, and make sure you put what? CR. Now, how do you transact? It will be the same thing. We're going to have date here, we're going to have details, and also the amount. So, when did this transaction take place? 3rd what? August 2022. What happened? We received goods from what? Shop what? Amounting to what? 1.5 million. Out again. 1.2? Okay, 1.2 million. Thank you. I thought you were sleeping. Now the question is, where is 1.2 million coming from? Shop fitters. So the shop fitters on the very same day, what did they do? What did they do? Well, the 3 August, we have fixtures, amounting to what? 1.2 million. Can you see what's happening here? Anyone following here? Are you able to follow?
Yes.
Are you sure?
Yes.
What did I say? What did you say there? Follow. Are you sure? Are you lost? Where are you lost? Did you follow the previous example? No, the example that we did before that. Did you follow it? Okay. What's your name? Smile. Smile who? What to mean this smile? To smile is for something. Or to read it the same. Or both names are. To read the smile. Can someone help to read the here? Please, can someone please help to read it? Smile, she's lost. Yeah. Can someone help? Men, gentlemen, can you help her, please? Yeah, try to help her.
Okay, the shop fitters have released, these fixtures, which has made their accounts of their figures to decrease, whereby the debit. Yeah, while all the shop fixtures, they have bought on credits, increasing the asset of figures which has made the account credit. Yeah.
Come in. Smile. You're not smiling. That's the problem. Did you? No. Did you get what he said?
I have repeat.
You have to repeat, huh? Gentlemen, repeat. May you please repeat?
Okay. Shop fitters here at Polisa. Here Polisa in Romori, here was a gym, there was a seat. So every is a body, every is a goal. So our increase in asset, in our reduce in the asset. Yeah.
Okay, what's happening here? I'll give you a simple example. You don't buy makeup from. What's your name, Matia? You want to buy makeup from Getu, isn't it? And for example, Getu is selling makeup at 9,000. I want to get makeup from Getu. You're buying it at 10,000, but on credit. You're promising to pay her maybe after 2 months, isn't it? So what happened here is you are going to increase your asset in the form of makeup by 10,000, isn't it? But your cash account is not affected. Your bank account is not affected, isn't it? So what happened here is you are receiving, you are debiting account. At the same time, you, in your books, you have to credit her account. Isn't it? Credit. So the debit account being credited with 10,000, where is the 10,000 going? It's going to smile 10,000. So in this case, you are saving each other on credit. No one is receiving money, but you are benefiting. Now you understand, isn't it? You wanted a makeup example for you to understand better, isn't it? Thank you. So, do you know the reason why you are using shop fitters and fixtures, guys? Is anyone lost again? Madam Pili, are we together? What have I said? Let's look at this is another example. Let's look at this example. Similar to the one that we've just done.
So,
Yes.
so where we brought pieces account, where we write the business brought, for example, the way it says makeup. So we were supposed to write makeup account.
Yes. You're going to have a makeup account. Receiving makeup account, receiving 10,000 from Gertrude. You see? So Gertrude is releasing cost amounting to. So I'm going to makeup account and Gertrude account. Thank you so much. Seem to be thinking deeply. Yeah. Let's look at another example. Can we move on? Ladies, can we move on? Can we move on? Is it understood? Do you have a question? Thank you. So, the next example is the business paid. Can you see? The business paid the amount owing. The amounts owing to all is the OWN. The business paid the amount owing to shop fitters in cash on 17th August 2022. The business what? Paid the amount owing to what? Guys, what would be the double entry? I want someone to help. The double entry, guys. Smart. Yeah, do you have any contribution? Yeah. How do you record this transaction? Now the amount of the date. How do you record that? Smart. Will you be able to do that? I'm sure you're thinking when you're pretending to be thinking. You're really thinking, huh? Or looking forward to that. You've never spoken. What are you saying? What is the But do you have anything to say? Is it well of you? Thank you. So, what is inside the elevator? The business paid the amount owing to what? Shop fitters on 71 August 2022. Yes, sir. How long was it here? I didn't want to raising hand. Oh, you didn't finish that? Now you finished that? Thank you. Yes. Well, yeah, try. Give it a try.
Would be cash account.
Or your cash account, yeah.
Um,
Okay, first of all, let us identify two accounts that are affected. The first one what?
the business page there.
The first one is what? Okay, I want us to identify two accounts that are affected by that transaction. The first one is what? Cash account. Huh?
Cash account is
Then the second one, okay. So what will happen is the cash account will release money. The shopkeepers will receive the money. What about the Waterman account? What about the fixed? This is the fixed account. What about the fixed account? Fixed account here is not affected, isn't it? Because the fixed account already received what? The goods on credit. Now what is meaning is the business to pay shopkeepers. Okay, can you write the fixed account?
So, last time we were talking about the payables and receivables, which means that the money owing is at first a receivable.
The man owing. Okay, the man that the business is owing shopkeepers.
Yeah.
So the business side is a payer. To the shopkeepers is a receiver. Understood that? It's a receivable, that's why they're receiving. It's a payer, that's why the business is paying out. Thank you. Can you write that? I want you to write that. I want to see. To write that pay account. Can you write it down? I want to see if you are doing the following. There are two accounts affected. The first one is what? Another one? Great. So in this case, anyway, if I were the one lighting there, I would have just used the same one. Account, eh? But I don't want to confuse you. For now, write two accounts because you'll be confused. But the best way would have debiting this account and writing a different one, cash account. You understand? You understand that? The best way would have just debiting this account, then you only have to produce one cash account. Or write the two accounts, the cash account and the shopfitters account. But I was saying because we already have the shopfitters account, just need to debit it, but they're receiving now. There is good now, they're receiving money. Understood? Any questions, ladies and gentlemen? You have questions? Someone said he's going to create a group, WhatsApp group. Where is it? Well, I wanted to give you an example. Some transaction that you can be doing, you can be practicing, isn't it? So the best way is just to take a picture of the example and post it on the group so that you can be practicing. Okay. Now, let's look at this account. Let's look at this example. Let's look at these examples, guys. Okay, I want us to, before we look at this example, I want us to look at two terms that we may come across in the course of what? Doing the double entry. Now there are two things. We may have sales, and there's also what we call purchases together, and we also have to look at these ways. We may have what we call a return inwards, and we may also have what we call return what? Return outwards. I want to discuss this before we continue with our example, because some transaction, some double entry may involve what? May involve sales or purchases. Sometimes may involve sales or purchases. Now, what are sales? If they say these are sales, or made sales today, what are sales in your opinion? Huh? The money made from selling a product. Yes?
Sales are products sold.
Sales are the products sold, or the stocks that have been sold, or the items that are sold out. Yes, the sales. Sales basically are looking at the goods, items that have been sold, isn't it? For example, if you are selling maize, and you have 500 bags of maize as at 1st January 2023, isn't it? Now, come 31st December 2023, you have remained with 100 bags. What it means is 400 bags have been what? Sold, isn't it? 400 bags have been sold. But now the question is, they have been sold at how much? 10,000 each. So it means sales in this case will be 400,000 times what? 10,000. This one will give us what? Sales. The goods that have been sold. So looking at the quantity of goods sold and or multiplied by the cost, the selling price of each one product, is it? Now in this case, the selling price will be what? 10,000. The quantity sold is what? 400,000, isn't it? If you multiply, what do you get? What do you get? 400 times 10,000. Huh? 400 million.
4 million.
Hey. 400 multiplied by 10,000. What is the answer? 10 million? 4 million. So our sales equal to what? 4 million, isn't it? So the goods, the stock, the interest, the 500,000 that you had, 500 bags you had in January for your stocks, isn't it? Or inventory. Altogether? Now the inventory has been sold. 400 out of that has been sold. So the 400 times the selling price will give you what? The sales that you have generated. So, what about purchases? purchases, what are these purchases? They are purchasing goods. We'll come across those ways, so we need to know them. Yes.
These are products which have been brought in or bought.
Okay, thank you so much. I'll give you a good example. We say, as at 1st January, we had maize amounting to what? We had maize amounting to 500 what? Bags, eh? The question is, where did you get those bags? Did you produce them or you bought them? Now, the cost, if you bought them, maybe you are buying them at the 6,000 per bag and you're selling about 10,000. So what it means is the amount of money that you use to buy, or if you look at the 500 bags, if these 500 bags were bought at 6,000 each, the amount that you get here is the total amount of what? Purchases. So purchases are goods or the item that you buy so that you can sell them at a profit, isn't it? So the product, as I say, you buy them to know that you will sell them. They are sold to you and you sell them again, isn't it? You will sell them. So you buy maize, you can pack it, you can blend it and sell, isn't it? At a higher price, isn't it? So the purchases that you generate there are what you have. So the purchases, if the goods that have been purchased are sold, basically if you purchase them at 6,000 and you sell them at 10,000, that means you have made up a profit of what? 4,000, isn't it? So purchases, you buy them so that you can sell. So the 500 bags were purchases because you bought them so that you can sell them at a profit. So more that. So we need to understand those terms. Sometimes when someone is buying goods, for example, you're purchasing maize, 500 bags. Before you purchase, you have to agree with the supplier. What's the quality of maize I'm looking for? What about quantity? Okay, what are the terms? They say the goods. If you ask them for a sample, they bring you a sample, you agree on the sample, you agree with the sample, you like the sample, then you say bring what? The product. So in business you say the sample should be matched with the actual goods that have been what? Brought in. If the sample and the product is different, someone is looking for a white motor vehicle and you give them a black one, they'll not buy it because that's not what they're looking for. So there's a possibility that when you're buying goods and you discover that some of the goods are not in good terms, what do? You keep them. You send them back faster than what? Faster than they came, isn't it? They might be coming in slowly, but you have to send them back faster. So, if you order 500 goods, and out of 500 goods, 50 bags of maize are not in good condition, or do not match the description, or do not match the sample that was presented to you. What do? You send them back to the what? Supplier. So the goods bought and sent back to the supplier, or rejected. You bought them and they have rejected them, you have sent them back to the supplier, are known as what? Returns outwards. Okay? Returns what? They came and you are returning them what? Back. If you are the one selling goods, now you are selling those 500 bags of maize, isn't it? And you discover that the customer discovered that what? That one will send those bags back to you, isn't it? So the maize that was sold by you and comes back to you because those bags of maize have been what? Rejected by the customer. We say returns what? Inwards. So I wanted you to understand the tense in what? Tense what? Do you have a question? Do you have answers? Huh? So, next time we meet, we're going to look at sales and purchases. We're going to look at more examples, but relating to what? Sales, purchases. Then we can move on with what happens. Having posted transactions in the T accounts, what next? So, you're making noise. I haven't declared that the class has come to an end. What are you doing? You want to go out before the preacher. Wait for the preacher to finish preaching. Now, I'm saying is that next week, what we're going to do is that we're going to move further, isn't it? What happens? Having posted the transactions in the T accounts, what next thing? So to move a step further, this is the beginning of bookkeeping. We're now keeping the records. We're a bookkeeper. We are producing these transactions. So we can go eat a day. Huh? Is that good?
Yes.
Thank you.